Friends, welcome back to our channel OMSAI Bhojanapalli.
So, yesterday's class, we started with the discussion regarding short single index model, in which we completed our discussion up to the correlation and regression portion. Please stop talking, settle down, stop talking, settle down, please. We completed our discussion up to correlation and regression. Today we'll continue to do that particular problem where more issues are going to be discussed. We'll first start with discussion about characteristic market line. Number 2, what is the meaning of the error term or standard error? Number 3, how to analyze a security risk into systematic risk and unsystematic risk. Number 4, calculating a number called as coefficient of determination. All this will be doing in this sum itself. Once we complete this sum, the next sum will discuss about sharp single index model in case of a portfolio, how to analyze a portfolio risk into systematic risk and unsystematic risk. Once we complete the next sum, the last sum in the sharp single index will be something called as sharp optimum portfolio proportions. It is a formula based concept. We will be seeing the steps or procedure and then try to find out optimum portfolio as per the sharp single index model. With that, we will complete the sharp single index model. Then we'll move on to the next concept called as arbitrage pricing theory. The last formal area that need to cover in this chapter, portfolio management. Please settle down. I don't want to summarize the entire chapter once again. I will summarize from the stop, please. Let me start. I'll summarize from the last class what we discussed in the sharp single index model and then continue with that particular problem. Please. Settle down. Can we start now? Please. I am hearing some voices. First, let us settle down, then I will start talking. Now, it will be very tiring when you and myself talk together because I have a duty also to teach other batches, right or not? Not only this batch. So, please maintain silence. For you also, more clarity will be got when the class is having the full silence. Can we start or not? Now, please, you give me a word that you maintain silence, then I will proceed here. This should not happen every class. Can I proceed? Okay, please. Let us summarize what has been done in this problem till now. Stop talking. So, those who come late, their bag opening sound or page turning sound should be very, very minimal. Consciously do that. So, just because you came late, don't show the urgency inside the classroom. It creates a lot of disturbance. Okay, peacefully come and settle down. And others, I think all should have opened by this time the notebook, workbook, etc. Yes or no? I should not even hear page turning sound because very simple. It is there in the same page only the problem. We are not doing any other different problem. Right or not? that box opening, then pen sound, page turning, nothing should be there. Can we start or not? Now, say, you experience that way any class, yeah, it will be something different. Can I proceed on? Now, please. It happens, say in tennis match in Wimbledon, what happens is, once a point starts, what happens? There will be full silence, yeah, okay. We can hear the sound of the ball going 2 and 4, right or not? Now, if we see our cricket match, players will be playing and they will be what, talking. It should not be like a cricket carnival, it should be like a Wimbledon match. Yeah. Can I proceed now? Please. Stop talking. Okay. Now only my mistake. Hard effort, I brought the silence. Okay, please. Settle down quickly. Now, please. Okay, now, see, we took 2 data from the stock market for the past 3 years, namely data regarding JK Limited shares and number 2, the market portfolio or the stock index. They gave you the price of the share as well as the dividend declared. Like that, they also gave you the index on the different dates as well as the yield on the shares constituting the index. From that, we first calculated the return of each and every security in each and every year. So the return of a security is nothing but year-end price minus year beginning price plus dividend divided by year beginning price. Like that, index, it is year end index minus year beginning index divided by year beginning index. That gives you the percentage capital gain plus what? Dividend yield, which I always give you in the problem, or it is available in the stock exchange publications also, right or not? So from that we found out the return of the security as well as return of the market. This was the first thing we did in that particular sum. Respond, yes or no? No. In that we saw that the return of the security in the first year is 25.62 and in second year is 20.07, in the third year is 17.05. First data available, right or not? Same way we found out the return of the market also. First year the market return is 12.62, second year 21.79, third year 5.32. So now we have 2 returns, return given by a single security and return given by the entire market portfolio. Now, when you have 2 sets of data, we can plot it as points in the graph, right or not? So to plot as a point, we should know the x-axis as well as what? Y-axis. What is the influencer is the x-axis. What gets influenced is the y-axis. Security return influences market return, or market return influences security return, market return influences the security return. So we call this market return as x-axis and security return as y-axis. Respond, yes or no? No. Then we started calculating the beta. We have seen that there are 6 ways in which beta can be calculated. Can tell me the 6 formulas for calculating beta? Change in security return divided by change in market return. Standard deviation of security by standard deviation of market into correlation of security and market. Covariance of security and market divided by standard deviation of market the whole square. Next is what? Sigma xy minus nx bar y bar divided by sigma x square minus nx bar the whole square. Then we had n sigma xy minus sigma x sigma y divided by n sigma x square minus sigma x the whole square. These are the 5 formulas we had, and the original beta is coming only from the regression analysis. That was the next issue we discussed. I don't know. Before that, we saw the covariance formula. The known formula, we calculated the beta to be how much? 0.15 times. Similarly, we use the other formula also and calculated the beta to be 0.15 times. So in our case, we calculate beta as how much here? 0.15 times. Can I proceed or not? No. Before I proceed, I just want to have in my sheet the numbers so that we can use it once again. We already have in your notebook. Facts summary we have, right or not? Okay, tell me the summary of the facts. Just a minute. Which we calculated. Tell me. Sigma x is equal to how many days here? 39.7. Okay, now please tell clearly, others don't talk. Next is what? Sigma y is equal to 62 point. Next tell me. X bar is equal to 13.24. Y bar is equal to 20.91. This is X bar and Y bar. Next we had what? Sigma xy is equal to 851.36. 851.36. Sigma x squared is equal to, how many days here? 662.36. Then we had n is equal to 3. All these numbers we calculated in the computation table and use it for our discussion. Right or not? Now, the last method only helped us understand really the meaning of the term beta. Now, we have a market return, we have a security return, x-axis and then what? Y-axis. When you plot the points in the graph, if the points automatically fit into a straight line, then we conclude that the data are perfectly correlated. The market return and security return are perfectly correlated. In a perfect correlation situation, the line will be having a slope, it will be meeting the y-axis at some point of time called as constant. We all know y is equal to mx plus c, where m is the slope of the line, c is where the line intersects the y-axis, or it is a constant, right or not? Now, in case of perfect correlation, we can take any 2 points and find out the slope. The slope is what? Change in the security return divided by change in the market return. Any 2 points will give you the same slope. The reason is it is automatically fitting into a straight line. In that case, the beta can be found out using the formula change in security return divided by change in market return because of the perfect correlation. If the correlation is not perfect, then the points will not automatically fall into a straight line. The points will be scattered. More scattered the points, weaker the correlation. Narrowly scattered, stronger the correlation. On line means perfect correlation. Now, if we have a point scattered, we have multiple slopes. Any 2 points will be giving you different slopes. In that case, what is the line we should be finding out, which we call as line of best fit? What is the line of best fit? A line which runs exactly in the middle of the scattered points, we call as line of best fit. The line of best fit beauty is that the point on that line and the actual point on the graph may be different. Sometimes it is different on the higher side, sometimes it difference on what? Lower side. That is why we call it as line of best fit. That line of best fit is a representative line for the market and security. Yes or no? In that case, what is the equation of that line? The question arises. So y is equal to beta x plus c or beta x plus alpha, we called it, right or not? In that case, we should now find out the beta and alpha, slope and the constant. Yes or no? In such case, we use the equation called as least squares equation or regression equation. So tell me the regression equation. Sigma y is equal to n alpha plus beta sigma x. Sigma xy is equal to alpha sigma x plus beta sigma x square. If I solve for these two equations, we are getting the value of alpha and beta. I think you should have got as beta as 0.15 and alpha as 18.93. Alpha is 18.93. With that, we stopped in the previous class. Yes or no? We also saw how that regression equation only became what? All this beta formula also has been incidentally derived. With this, yesterday's class was completed. Can I proceed further or not? No. This is what Sharp now calls as characteristic market line. They call us what line here? Characteristic market line. Now, look at this. This we have calculated. What is the calculation we had in solving this equation? We got alpha is equal to 18.93 and beta is equal to 0.15. Can I proceed or not? Now, this is a regressed line in which we believe that 0.15 into the x plus what? 18.93 will be the y. Are you follow what I am saying? Now, I'll write it and proceed further. Now, do we have an equation of straight line? Yes. Tell me the equation. Y is equal to mx plus c, that is beta x plus alpha. Now, y is market return, security return, security return. Sharp calls this y as RI. He calls us what? RI. Return on an investment. I invest in a particular security. He calls us what? RI. Thus I am putting the term used by the Sharp now. Okay. Y is equal to what? RI. Then we have what? Beta. Beta means beta of the given security. X is what? Market return. Return on market portfolio. Everybody know what is that here? RM plus what? Alpha is the line. Are you following what I am saying? So what is the equation here? Return on a security. What is return of a security? It is beta times return of the market plus what? Alpha. Respond. Are you following what I am saying? Now can tell me this equation in this problem, what is RI? Return of a security is equal to what is beta? 0.5 into the return on market. That is given say in every year plus what? Alpha is 18.93. Alpha is 18.93. Somebody says market return is 10%. What is market return? 10%. What should be security return? 0.15 into 10% plus what? 18.93. Market return is going to be say 18%. Market changes, security also changes or not? When market changes, security changes. How it changes? We have to have a relationship or not? Always between two items, relationships are established through functions. Yes or no? This is a function, a linear function where the function is Ra is equal to 0.15 Rm plus 18.93. Answer me. Suppose the market return is 8%. What is market return? 8%. What should be the security return? Ra is equal to 0.15 into 8 plus what? 18.13 will be giving you the security return. Everybody following what I am saying? So this is what they call as what? The characteristic market line. We call as what? Characteristic market line. Can I push it or not? No. Tell me. In this problem, there is JK limited share and then what? Market. Market return is going to influence my security return or not? Security return is depend upon what? Market return. Tell me the relationship between security return and market and tell me the equation RI. The return of a JK limited share. RI is equal to what? 0.15 market return plus what? 18.93 which is found out through what? The regression analysis. Everybody following what I am saying? Now, I just add one more extra term here plus EI. Plus what? EI. Then only the equation will be made full. It will be made what? Full. This EI we call it as error term. We call it what term here? Error term. What it is will be discussed in the next stage. Everybody following on? So now tell me characteristic market line. Simply characteristic market line simple equation is return on security is equal to beta times return on market plus what? Alpha plus error term. This alpha don't think it is a risk-free return. Not at all. Because the graph is between what? Market and then what? Security. It cuts here. It is not risk and security. To call us what? Risk, it is going to be market and what? Security. This means even the market return is what? 0. Security gives you some return or not. That is what we call as alpha. That alpha can even be negative. The alpha can even be what? Negative. For example, I have a graph like this. Say, look at this graph. Okay. This is what? X-axis. This is what? Y-axis. What X-axis here? Market. What is Y-axis here? Security. Okay. Now, generally security may be giving a return lower than what? Market also possible. Yes or no? Some shares always give a return lower than market because of its lower risk also possible. Let it not. Now, this can even be what? Line where the alpha can even be what? A negative number. Everybody yes or no? Alpha does not have any meaning. Does not have what? Any meaning. The simple meaning of alpha is it is the intercept of the line in what? Y-axis. That means when the market gives you 0 return, what is the security return can even be what? Negative. Alpha negative means security is always giving a return below what? Market return. Alpha positive means certain normally gives return more than the market return. It is not risk-free return because risk-free return, this x-axis should not be market. Should be what? Risk. When risk is 0, what is return? We call as what? Risk-free return. This is not 0 risk. If the market return is what? So much. If market is 10%, this is security return. Market 8, security return this much. When the market return is what? 0, what is security return? We search for alpha. It is nothing but an intercept of the say line in the y-axis is what we call as alpha. Everybody, are you following or not? So now characteristic market line has been formed. Tell me the equation here. RI. RI means what? Return of a security is equal to Beta times return of the market plus what? Alpha plus EI. The EI is called as what? Error term. Tell me what is beta? Slope of the line. When the market changes by so much, how much the security return changes. That is what I call as what? Beta. So beta is the slope of the line and alpha is what? The constant. It is the intercept of the line on what? Y axis. It means even the market gives zero return, the security gives some return or not. The return the security may give may be positive or negative. That is what we call as the alpha. Nothing but the for different. Very simple. Again I say, if market return is 10%, there should be a security return. If the market is 8, there should be a security return. Yes or no? If the market is 1, there should be what? Security return. If the market is 0 also, there should be some security return or not. That can be either here or what? Here where the line cuts y axis, that is a security return. The market return is what? 0. That number only we call it as what? Alpha. From there only the line starts here. Everybody, are you following what I am saying? So this is called as alpha. We cannot have any other great meaning for what? Alpha at all. Can I put or not? Now this is called as characteristic market line. Now the issue is, sir, what is this error term? Question arises now. What is this one? Error term. Can I start or not? Now, discussing about error term only will help us take the discussion forward. So now we are going to discuss about the error term. Please tell me the equation once again. Ri is equal to 0.1, that is beta Rm plus alpha plus EI. In our case, this problem, what is a return of a security JK limited? It is 0.15 times the market return plus what? 18.93 plus what? EI. Can I put it or not? Now, please. Let us understand the meaning of error term now. Statistically, what it means. Before you go for the next stage, you need not copy it now. I'll put on the slide. At that time, you can just copy it. Can I put it or not? Now, tell me, I am now going to discuss about the concept of what? Error term in the regression analysis. Can I proceed? Now. Okay. Forget about error term. Return of a security is equal to 0.15 return on market plus what? 18.93 is our equation. Everybody accepting it or not? Okay. If I know a market return, I can guess the security return. This is the issue. If I know the market return, this is the input, I can guess what? Security return. This equation helps you to guess the security return. Are you following what I am saying? Now, please tell me first. Here, 1, 2, and then what? 3. I want to know the return on market. That is your X in your problem. Yes or no? Here, return on market X. Can you tell me in the first year what was the market return? Can you tell me the number here? 12.62. Next is what? 21.79. Next is what? 5.32. 5.32. I hope everybody following or not? No. I know the market return. From this, can I guess the security return or not? Yes, known the market, if this market is 12.62, the JK should give me some return or not? So what should be the return given by the JK? We can find using this regression equation. Can I proceed? Now, using CML. What is CML? Characteristic market line. We can find out what? The security return. Using CML, I find out RI. The word RI means what? Security return. Tell me, let us substitute and write it. Tell me what is the TM? 0.15 into, what market return? 12.62 plus alpha is how much? 18.93. Tell me what it is here? 1%? 20.82 Chilambam, 20.82. If the market return is 12.62, the security should be how much? 20.82. Please. Next, 0.15 into, what is RM? 21.79 plus, what is this here? 18.93. What should be security return? 22.20. Okay. Next. Third is what? 0.15 into 5.32 plus 18.93. Tell me what is the number? 1%? 19.73. Now, let us understand what is this. Last class, we always discuss frame by frame. Let us consolidate everything before you go for the next stage. Very simple. Last class, We had a data given about the JK Limited share and market share. We plotted the points on the graph. We saw that the points are not falling into a straight line. The points are what? Scattered. But still I want to make the two variables into a linear equation. I wanted to have a representative line. The representative line should not be a line above all the points. It should not be a line what? Below all the points. I want to have a line of best fit. I want to have a line of best fit. For that, use what? A regression equation to find out the slope of that line, which is called as what? Beta. Where the line intersects the y axis, which is called as what? Alpha. We calculated the beta using the regression method as 0.15 and alpha is what? 18.13. We all know y is equal to mx plus t straight line. Yes or no? Inga y the security return, which I call as what? Ri, and m is what? Slope of the line, which I call as what? Beta. X is what? The market return, which I call as what? Rm, and c is what? Alpha. So we have Ri is equal to beta times Rm plus alpha. Up to this clarity or not? Now, what it is, I added one more number to the right called as what? Plus EI. Above that EI only, we are now discussing what is an error term. Everybody, are you following what I am saying? In that, first of all, we had past 3 years, the market return actual, yes or no? It is how much? 12.62. 21.79, 5.32. If this is a market return, this should have been what? Security return as per our CML. Yes or no? What is the expansion of CML? Characteristic market line. As per the CML, this should have been the security return for these market returns. Respond. Are you following or not? Now, please, I'll proceed further. You can write year 1, 2, 3. Now, I want to know the actual RI. Look at the notebook. We found out first year, second year, third year. Actually, J Capital gave some return or not? Tell me the past 3 years. What the actual RA? Tell me. 1%? 25.62. Next is 20 point. What the third? 17.0. This is the return actually earned by the security. But we found out the same RA using our line, regression line. So no, the regressed line gives you an RA or not. Now I call this is the RA. I call as what? Actual, which is got from the stock market, the actual performance of the company. Yes or no? Now I write out another RA. This is as per what? CML. What is CML RA? Tell me it is how much? 20.82, 22.20, and then what? 19.73. Respond yes or no. Now, my question is the point on my line and the actual point same or different? Same or different? Different. Now, see here, very simple. I'll explain through the graph now. Not accurate graph, just find approximately have what? X and then what? Y. X is what? Rm. Y is what? Ra. Enna parade or not? Now, see. I had a line like this, which having a, what is the line here? 0.15 Rm plus what? 18.93. Enna parade or not? Now I have this particular line, and actually some points I plotted or not. For example, a point may be here, a point may be here, a point may be here, a point may be here. So many points may be there. Are you following what I am saying? Now, the question is, using this equation, I have an Rm. No, I am going to have what? An Rm. Okay. As per the written on market, for this Rm, using this equation, this should be my Ra. Yes or no? But the real Ra stands what? Above this. That means the point found out by this line is a correct point or wrong point or wrong point. Really the RA is here, but the line says what? RA is here. In that case, I am right or wrong? Wrong. The difference between the two will be called as what? Error. Will be called as what? Error. Are you following what I am saying? Very simple. If I find a point on this line and add the error, I will be getting the actual point. If I find a point on this line and add what? Error, I will be getting what? Actual point. Similarly, in this case, for this Rm, the line says this is the Ra. Line says what? This is the Ra. But the actual Ra lies what? Below it. Now tell me, is the line point correct or wrong? Wrong. Our regression line is what? Wrong. It is wrong on higher side or lower side? Higher side. So the error will be what? Negative. It will be what? Negative. So the point on this line minus what? The negative error will give me the actual point. Respond yes or no. Now, why the error occurs? Error occurs because data is not perfectly correlated where the real point also falls in the line and the regression line also is what? Same. Since it is a scattered number, I only find out an average line. Only find out what? Average line, a line of best fit. So the real point may be above the line or below the line. The difference between the point on the line, which we found out using what? Regression equation, and the real point we call as what? Error term. Is a very important concept. From this only we understand latest unsystematic risk. Are you following what I am saying? So are you able to understand the error term or not? Now look at this. 25.62, 20.07, 17.05 are all points on the line, real points. This is the actual return given by JK Limited. But our regression equation says this should have been the return. Okay, we use a market return and a regression line to guess that the return should be what? 20.82, 22.20, 19.73. This guess is made based on a market return and alpha. Yes or no? Now, this is my guess. This is actual. Is my guess correct or wrong? Wrong. So I call the mistake as what? EI. The real point is 25.62, but the actual point is only how much? 20.82. Tell me, my error is positive or negative or positive error. The actual point is more than what? The regressed point. Tell me the difference here. 4.8. 4.8. One by one solupa, please. Now, second case, please. Please stop telling. The point on the line, as per my guess, the point on the line is how much? 22.20. But the real point is what? 20.07. The real point lies on the line, above the line, below the line, below the line. So the error is on positive and negative side. Negative side. What is the error here? Minus 2.13. Now, the point on the line. Wait here. Everybody, let us do together. Yeah, we should be having positive correlation. Class should not be scattered. Yes or no? Then error will come in understanding. Can I proceed? Can I proceed? Now, the point on the line is what? 19.73. Real point is what? 17.05. Real point is on the line or below the line? Below the line. Error is what? Negative. What negative error? 2.68. Can I have the 2.67? Round it up. Please, 2.67. I can have it. Yeah, don't shout with me, please. I am third umpire, my discretion. Can I proceed now? Rounding off. Now, beauty is the total of error should be 0. Then only the line is line of best fit. Don't clap. Yeah, clap. Call PSM. Find out what all the regression etc. Are you all following or not? Now, see, that means this is a correct line. This is a regress line, representative line only when the error total is what? 0. For example, I draw a line like this. I have a line like this. I find a line like this. It is having a beta and also what? RM. This line is not at all representative of JK Limited share because always the line is what? On a higher side. In that case, error will not be 0. Now, suppose I have a line like this. In that case, always the error will be what? A positive number. Or the error will be what? A negative number. I want the error to be what? 0. I should construct a line in such a way that sigma y is equal to n alpha plus beta sigma x. Sigma xy is equal to what? Alpha sigma x plus beta sigma x squared. That line is found out in such a way that is a line of best fit where the error term total is what? Sometimes on a higher side, sometimes on what? A lower side. This is because of the scatter diagram. Always the average line is going to be the line of best fit where the error is going to be what? 0. The deviation from the line is what? 0. So the error term should be 0 for a regress line. Are you following what I am saying? Now, this is the meaning of the term error. Are you able to understand error term or not? Now, very simple. I want to find out the actual return of the security. I want to find out what? Actual return of the security. How I can find out? Very simple. Number one, this is a market return. Yes or no? RM. So beta times RM. Beta times what? RM. Plus what? Alpha. Plus what? Error term will give me 25.62. Yes or no? What is RI? RI is equal to what? Beta times RM. Plus what? Alpha. Plus what? Error term will give me 25.62. Yes or no? Second case, beta times RM plus what? alpha minus error term gives you what? 20.07 and so on. So now tell me the characteristic market line Ri is equal to what? Beta times Rm plus alpha plus Ei gives you what? The given return of a security, actual return of a security. Everybody, are you following what I am saying? Now, if the correlation is perfect, correlation is what? Perfect. What they get here and what is actual, both will be what? Same. All errors will be what? Zero. Anyhow, the total of error will be what? Zero. That is not an issue. But the total zero comes because every number is also what? Zero. Will not have error at all in case of a perfect correlation. In case of an imperfect correlation only, our regress line will be having what? Error with the actual point. Up to this, are you able to understand the concept of error term or not? Because after this only, I go for the important discussion called as risk of the security. I am going to discuss about what? Risk of the security in the next stage. So now can we write the equation for a characteristic market line, have a small notes for the error term, and then start discussing about the security risk. Everybody following up? Now, risk of the security and the portfolio only, in one of the exam, I think the second previous attempt, they asked for 8 marks. Okay, most of them did not know how to answer it, but this discussion is very, very important to answer such type of questions which have at the end of the workbook also in practice problem segment. Can we proceed or not? Now, so now up to what you have written here? We have written up to the beta formula and derivation. Written up. Now, give the heading. Characteristic. We are going to give a new heading. Characteristic market line. Characteristic market line. Sharp single index model. Characteristic market line. Sharp single index model. Sharp single index model. Can I proceed? Point number 1. Point number 1. Since the points representing the market return, and JK Limited shares return, since the points representing market return and JK Limited's shares return were scattered, since the points representing market return and JK Limited shares return were scattered, through regression, through regression, we found out a representative line. Through regression, we found out a representative line. Through regression, we found out a representative line called line of best fit. Through regression, we found out a representative line called line of best fit that establishes the relationship between the market and security return. That establishes the relationship between the market and security return. That establishes the relationship between the market and security return. Everybody, yes or no? Now, point number 2. The equation of that line is referred to as characteristic market line. The equation of that line is referred to as characteristic market line. The equation of that line is referred to as characteristic market line. It is as follows. Write the equation Ri. In this case, Ri means what? Y. Or y axis Ri in a which is written on what? Security. In our case, written of JK limited share. Okay. What is written of JK limited share? Is equal to alpha plus what? Yeah. Correct na? Yeah. RIY is equal to plus put earlier or later. It is same only. Believe me. Can I say it? RIY is equal to alpha plus alpha plus beta RM. Alpha plus beta RM. What is RM? X. X represents RM. Alpha plus beta RM plus what? EI. What is EI? Error term. EI is error term. Please. Shh. EI is error term. Now, even if the marker return is 0, the security will be having return not. The return is called as what? Alpha. Alpha represents the return of security. Even the marker return is going to be 0. That's the meaning of that. Can I present not? Now, RI, that is Y, is equal to alpha plus beta RM plus EI. You want to write beta RM plus what? Alpha plus EI. Rendume onnu dhaan. Can I present not? Now, please. Shh. Don't by heart so much. Can I proceed? Next. In this case, continue writing. In this case, same point you write. In this case, RI is equal to what is alpha? 18.93. RI is equal to 18.93 plus 0.15 RM. 18.93 plus 0.15 RM plus EI. 0.15 RM plus EI. Okay, next point number 2 or 3 M? 3. Please, point number 3. Now, I want some discipline. Always don't do side commands, affect the flow. Can I proceed? Point 3. Even if market return is 0, even if the market return is 0, the security gives some return. Even if market return is 0, the security gives some return. The security gives some return. Bracket la, it may be positive or negative. The security gives some return. Bracket, it may be positive or negative. It may be positive or negative. Bracket close. It is called what? Alpha. It is called alpha. Can I proceed? Point number 4. In addition to alpha, the security gives what return? Beta times market return. In addition to alpha, security gives beta times market return. In addition to alpha, the security gives beta times market return. So, the security return is 18.93 plus what? 0.15 times market return. In addition to alpha, security gives beta times market return. Point number 4 or 5? 5. What is then the error term? Point number 5. What is then the error term? What is then the error term? Can I proceed or not? Now, write down within that point A. Point A. Error term is nothing but the difference between the point on the regressed line. Error term is nothing but the difference between the point on the regressed line, and the actual point in the graph. Error term is nothing but the point in the regressed line and the actual point in the graph. The point in the regressed line and the actual point in the graph. The point in the regressed line and the actual point in the graph. Can I proceed or not? Now, point B. Point B. Draw a small graph, just a rough one. Okay. We have x-axis, we have what? Y-axis. X-axis represents what? Return on market. Y-axis represents what? Return on investment. That is a security we mean. Return on market, return on security. Now, we have found out a line of best fit. This is a regress line. This is going to be what? Regress line. Can tell me the equation of regress line? 0.15 RM plus what? 18.93. 0.15 RM plus 18.13. Correct about 18.93. Okay. Now written correctly or not? Okay. Now actual point, let us have 1 point here, another point here, third point here, fourth point here, fifth point here, and so on. Okay. Don't plot all the points below or above. It should be line of best fit now. It should be cutting middle through the scattered graph. These are all the actual points. Now, can I proceed or not? Let's take any one thing. Now, call this as RM. This is what? RM. Let's join it. This is actual point. This is what? Actual point. And this is what? The point on regressed line. This is, I can say, CML point. Is the actual point. This is what? CML point. Actual point, CML point. This difference, we call it as what? EI. This difference we call as what? Error term. This difference we call as error term. This difference we call as error term. Can I proceed? We can have one more example here. Okay. Okay. This is what point? Actual point. And this is what point? Point as per characteristic market line. So regress point, actual point. Now tell me, this difference is called as what? Error term. The difference is called as error term. The difference is called as error term. Everybody able to understand it or not? The difference is called as error term. All this will be useful in understanding the later discussion. Can I proceed? Now. Have you all finished copying the graph? Huh? Yes or no? Now. Shall I move further? Point B or point C? Point C. The line of best fit, the line will be called as, line of best fit. The line will be called as the line of best fit when the total of error term is 0. When the total of error term is 0. The line will be called as line of best fit when the total of error term is 0. Continue. This means sometimes the actual points, lie above the line. This means sometimes the actual points lie above the line. Sometimes the actual points lie above the line and sometimes below it. And the error gets evened out. Evened out means what? One right, one wrong. Yes or no? The error gets evened out to make this line representative. And the error gets evened out. To make this line representative. And the error gets evened out to make this line representative. Everybody, can I proceed or not? Next. Point number 6 of IM. Point C or D? Point D. In this problem, the error term is calculated as follows. In this problem, the error term is calculated as follows. Step 1. Calculation of RI. Step 1, calculation of RI using CML. Calculation of RI using CML. Calculation of RI using CML. This is step 1. Can I present or not? Have the following columns: year, RM, RI using CML. Year, RM, RI using CML. Okay. Year 1, 2, 3. Year 1, 2, 3. What is RM? 12.62, 21.79, 5.32. I hope you are applying your mind and knowing what you are writing or not. So 12.62, 21.79, 5.32. What are these three numbers? What are the three numbers here? This is what the actual return the market has given. This is the return the market has given. 12.62, 21.79, 5.32. Now tell me, if the market has given 12.62, then what should be my security giving here? 0.15 times market plus what? 18.93. So CML RI is 0.15 into 12.62, 0.15 into 12.62 plus 18.93. 0.15 into 12.62 plus 18.93 is equal to 20.82. 0.15 into 12.62 plus 18.93 is equal to 20.82. Second year. 0.15 into 21.79, 0.15 into 21.79 plus 18.93. 0.15 into 21.79 plus 18.93, 22.20. 22.20. 0.15 into 5.32, 0.15 into 5.32 plus 18.93, 19.73. 0.15 into 5.32 plus 18.93 is equal to 19.73. Now, what are these three numbers? What are the three numbers here? Return of JK Limited share. If this is a market return as per the regress line, yes or no? Now, this number should be same as the actual number of? No. Difference is called as what? Error. Step 2, calculating error term. 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 Can we start or not? Now, year 1, 2, 3. Year 1, 2, 3. RI actual. This is the actual point. Okay. Year 1, 2, 3. RI actual. What is RI actual? 25.62, 20.07, 17.05. 25.62, 20.07, 17.05. RICML 20.82, 20.82. We already calculated now. 22.20, 19.73. 20.82, 22.20, 19.73. EI, error term. What is error term? 4.8 minus 2.13 minus 2.67. 4.8 minus 2.13 minus 2.67. The total should be how much here? 0. Then only I can call this line as what? Regression line. The total is 0. Did you understand this point or not? Now, A, B, C, D, E, or F. Tell me the point here. Point E. This error term is referred to as standard error. This error term is referred to as standard error. So in the any question they use standard error, that means what? This is used. This error term is referred to as standard error. Let's see the standard in hypothesis testing in CPT, yes or no? This error term is referred to as standard error. It is referred to as standard error. Stop talking. With this we have completed the discussion about what? Characteristic market line. Okay, now just a minute. What is the point number 5 or 6 or 7? Point number 6. Last point. Point number 6. Hence, RI. Hence, RI. Bracket la actual return. Hence, RI in bracket right. Actual return is equal to regressed return plus error term. Hence, RI actual return is equal to Rigorous return plus error term. RI actual return is equal to rigorous return plus error term. Or you will follow what I am saying. Rigorous return, put a down error mark and write 0.15 RM plus 18.93. Rigorous return is 0.15 RM plus 18.93. 0.15 RM plus 18.93. And error term we call as EI. We call error term as what? EI. Error term we call as EI. This EI, this is E1, this is E2, this is what? E3 and so on. Error term is EI. Respond everybody. I will follow saying. So return of a given year. Return of the first year is something like what? The rigorous return. What rigorous done? 20.82 plus what is the error term here? 4.80 using 25.62 and so on is what is the feature of a characteristic market line. Everybody are you following or not? Okay. Now, till now, in this characteristic market line, we are discussing about a return of a security. Discussing about what? Return of a security. What return of a security? Return of the security is beta times return of the market plus some alpha plus what? An error term gives you what? Return of the security. We discuss about the return angle now. Yes or no? Always we saw that in portfolio theories, to understand a security, you should know two things. One is what? It's expected return, and second is what? Is risk. Now he changes the focus to the risk angle. Are you following what I'm saying? This is one of the major contributions of sharp singles model. Is defining a risk very scientifically or mathematically. Everybody following on. So now we are going to change our attention to what? Risk angle in the sharp single index model. Everybody, are you following the flow of the discussion or not? Okay, now. I understand it is overloading somewhat more, say, statistics dominated, consolidation, not everything, overall view. First we discuss what are the 6 ways of calculating what? Beta. Next we saw that beta is nothing but a regress, line is what we call as the slope of a regress line is called as what? Beta. We saw how to calculate beta using a regression equation. We establish correlation and regression relationship. When correlation is perfect, the points automatically fit into a line. In that case, even we can use the change in the security return divided by change in market return as what? Beta calculation. Otherwise, find the line of best fit. Line of best fit equation is Ri is equal to what? Alpha plus beta time Rm plus what? Ei. What is Ei? Is the difference between the actual point and the point as per the regression. Is what we concluded our discussion. Respond is or no. And one point I forgot, a last point, don't mistake question. Point number 6 or 7? 7. When correlation is perfect. Last point, point 7. When correlation is perfect. When correlation is perfect, the actual point and regressed point. When correlation is perfect. When correlation is perfect, the actual point and regressed point. The actual point and regressed point will be same. When correlation is perfect, the actual point and regressed point will be same. That is, EI is always 0. EI is always 0. Very simple. When correlation is imperfect, sigma EI is 0. When correlation is perfect, what? EI itself is what? Always 0. When EI is 0, the total also will be what? 0. Continue, same point. When correlation is imperfect, sigma na path here, so confusion, correlation imperfect, sigma EI. Did you see the word sigma here or not? Sigma EI is equal to 0. When correlation is imperfect, sigma EI is equal to 0. Sigma EI is equal to 0. Sigma EI is equal to 0. And in perfect correlation, what happens here? EI and what? Sigma EI. In perfect correlation, error and then what? Summation of error. EI and sigma EI is equal to 0. EI and sigma EI is equal to 0. Okay. Now, can I proceed to the risk angle of this particular problem or not? Now, give the heading. Analyzing risk using sharp single index model. Analyzing risk using sharp single index model. analyzing risk using short single index model. Analyzing risk using short single index model. Okay. Before I proceed, see, sometimes you may not like the depth in which a issue may be what? Discussed. I also don't like to spend unnecessary time in the class here. Okay. For me also effort only. But understand that more deeper you study a concept, more you will learn about it, more clarity is there. In examination, confusion may not be there. Institute confusion, okay. Institute doesn't know the concept deeper. That is why so many errors are creeping in the question paper, not in the regression line. Yes or no? Now, see, because every line, the difference should be what? Known, how it has been derived. If you study deeper only, I'll say one thing. When you read a question paper, you will not have any confusion, not have what? Any confusion. What to say, why it is, okay. What is error, what is regression, what is correlation. Only if you know all those things, yeah, perfect understanding is possible. It may be very easy for me to write equation. CML question, RA plus beta, RM plus what? EI. One question I can solve very easily. SML, I can solve what? CAM very easily. I can even what? Do capital market line. But nobody knows what different RA, different K, what it is, what the portfolio chapter is what? All about. You should know the context, yes or no? Now, not to demean, this is how study material written, yes or no? If you have watched study material, they will not be having what? Any cogency, because everything treated what? Separately, and suddenly one question is asked, they don't coin question will be what? Lifted from some other examination. The context will not be understood by us. It becomes difficult to answer it. I will find not. Hard way something should be learned, you should be learned only that way. That's what I'm saying. If you are not able to understand in 10 minutes, spend what? 20 minutes in understanding it, but don't leave anything what? Vague or hazy while preparing for the examination. Everybody following or not? Now, my question is, up to this written angle I discussed now, those understood the Ri is equal to beta Rm plus alpha plus Ei, fully raise your hand here. I think I believe you are not. Now, can I proceed to the next stage? No. Because I am going to go for the another angle called as risk angle in the discussion. Please. Shh. Stop talking. Please, tell me, here, then we have what? The RI, return on what? Security. Then we have what? RM, the return on market. This is called as Y-axis. This is called as what? X-axis. You all remember this or not? Please. Can tell me the number once again? 1, 2, and 3. I want actuals. What actual return of security? 20.62, 20.07, 1%. Who is talking? Please. What is RM? Tell me. 12.62, 21.79, 5. Please. We also now calculated EI. Called as what? Error term. What is error term? 4.80. Next is what? Minus 1. Next is what? Minus 2. This is error term. Everybody, yes or no? Please. Shh. All this have happened. Everything has what? Happened. Okay. Last 3 years, this is what security JK limit has given me written. Yes or no? My question is this written certain or uncertain? Solviya, yes or no? Now, first of all, settle down. Why this noise? Tell me first. Can I proceed? Now, I am going into the next angle called as what? Risk angle. Now, see. Understand that all these are intricate. Understand the double difficulty for me. I could have thought singleness model very easily had you been very thorough about standard error, correlation, regression in CPT. Did you understand my difficulty or not? Now, I am teaching a final portion along with what? The CBT college equation also, right or not? So, if you know that statistics very well, I can just build upon what? The knowledge, it can be completed quite easily. Did you understand it or not? Now, I had to only tell you the market interpretation of that. Now, the original statistics, are you following up? But now, I have the dual role to play or not, as a CPT faculty as well as what? As a final faculty, right or not? But I have not been given twice the time. I have been given what? The same time to complete the portion, right or not? Same mouth what is talking now will ask us when you will complete the batch. February middle will start asking when the batch will be what completed. Pressure will start mounting. Right or not? Please understand my situation where I have to make you understand very abstract concepts. The concept is what? Very abstract. It's not like an accounts double entry, not like what? Law subject provisions here, where you have something before you to see and then easily interpret. So no, I'm here to make you visualize and interpret. For that, I should be having a class cooperative. You will be having that concentration, that silence is required. Otherwise, for me, what I have to repeat once, I'll be repeating what 3 times, the portion gets dragged here. Can I proceed or not? Now, if I complete single index, I escape portfolio. Can I proceed? In the last leg, apart from that, APT and also is very similar or simple to understand only. There's a last area where statistics is very much involved. Can I proceed above? Now, see. I wrote 3 data. What are 3 data here? First of all, the security JK limited share gave you 25.62, 20.07, 17.05. Accept or not? Tell me, this JK limited share return is certain or uncertain? Certain or uncertain? Uncertain. If the return is same in all the years, whatever happens, like government of India, but it gives you what? The same return. So this data is uncertain. The return is what? Uncertain. It is having a risk or not? The risk I call as sigma y. I call as a standard deviation of y. The risk of the security. Right or not? Like that. Market portfolio, 1 year gave me 12.62, another gave me what? 20.78, third gave me what? 5.32. Now please tell me, this market portfolio return is also certain, uncertain, uncertain. It is having risk or not? Which we call as what? Sigma m. Yes or no? Now, in this, they measure risk as variance. Variance means what? Sigma y square. And going to be what? Sigma m square. He is going to be the risk of the security and then what? Risk of the market. Variance of security and variance of market. Yes or no? Error term is same or different? Error terms are different. Different. Yeah. How the market return varies, how the security return varies. Same as the error term also what? Varies. Error term will be same only when the correlation is 0. So when the correlation is what? +1. The error will be what? As 0. This error term is also having what? Standard deviation. I have something called as standard deviation of EI. Standard deviation of what? Error term, which can be what? Squared to call as variance of error term. Are you follow what I'm saying? Now, I have 3 variances. I have 3 data. And how many variances here? 3 variances. Sharp says there's a variance for the security return. There's a variance for what? Market return. There is also a variance in my regress time. Call us what? A variance of error term. Don't say error term variance is 0. The error term average is what? 0. When a square sign will vanish. So no. So the error term is having a variance. The market is having a variance. And the share is having what? A variance. With these 3, they link to understand about the security risk. Are you understand what I'm saying? Now, short gives a formula. We'll understand more about the formula in the next stage. Can I say? Let me write the formula. How we had a formula for return is having a formula for what? Risk. What's the return formula? Ra is equal to alpha plus beta times Rm plus error term. Yes or no? Like that. How we have a formula for error, that is the return. I have a formula for what? Risk. He called the formula as follows. V is equal to beta squared, V is equal to beta squared sigma m square plus sigma ei squared. This is the formula for risk. V is equal to what? Beta squared sigma m squared plus sigma ei squared. Suppose write like this: beta sigma m the whole square plus what? Sigma ei squared. Both are what? Correct formula only. Yes or no? Instead of writing beta square sigma m, the writer what's beta sigma m the whole square plus what? Ei squared is equal to what? V is the formula for risk. Is the formula for what? Risk. Okay. Again, write. V is equal to, tell me the formula. V is equal to what? Beta squared sigma m squared plus sigma ei squared. V only I call as total risk. I call as what? Total risk, which is nothing but the standard deviation of the security return, sigma Ri square. The variance of what? Security return. We have the security return variance is there or not? So the variance of security return only I call as what? V. The standard deviation of security is the standard deviation of the asset or not? If a square will be getting what? Variance of the security. The variance of security is what? Sigma Ri square. You want to also call as what? Sigma Y square. Because security represents what? Y. This V. It is total risk. Now, risk of a security is a standard deviation. Or can be squared and called as what? Variance. Variance is the risk of the security. What is variance? Variance is the risk of the security. Now, next. This variance or risk of the security, I call as what risk here? Total risk. Risk is classified into two types. What two types of risk here? Systematic and then what? Unsystematic. Sharpe calls this term beta squared sigma m squared as what risk? Systematic risk, and he called this standard deviation of error as what? Unsystematic risk. Sharpe is able to differentiate the sigma into what? Systematic and then what? Unsystematic. Standard deviation of a security is total risk. This is what is total risk. In the total risk, there are two variants. One is what? Systematic. Another is what? Unsystematic. What we all say, for this we should not be asking what? Premium. For this only what? Premium should be asked. So the total risk of a security is equal to systematic risk plus what? Unsystematic risk. Systematic risk is found using what formula? Beta times beta square times sigma m square. And what unsystematic risk here? The standard deviation of variance of the error term. Very simple. Instead of using sigma, we use everywhere what? Sigma squared. Variance for the discussion. That's all. Point number one. Everybody, yes or no? We'll go deep into the formula in the next stage. Can I proceed or not? Now tell me the formula first. V is equal to what? Beta square sigma m square plus sigma ei square. What is V? Total risk. Nothing but what? The variance of the security. The variance of Y. This is having a standard deviation squared by having a variance or not? The variance of security, the Ri variance, I call as what? V. It is called as variance of security. What is variance of security? It is beta square sigma m square, which we call as what risk? Systematic risk. And this is sigma Ea square. It is called as what? Unsystematic risk. Point number one. Respond yes or no. Simple logic to understand. See. Why the security return varies? Question arises now. Why the security return varies? The security return varies because the market varies. One reason. Why the security return varies? The security return varies because what? The market varies. It varies how much times the market? Beta times the market. Is what I am saying. In that case, the security return varies because of the market variance. How much varies here? Beta times the market. This can be easily understood here. Now, standard deviation of market is a market change. Beta times the standard deviation is what? The security change. If I square it, I know the security return is varying. Yes or no? Now I can say security return varies because the market varies. How many times it varies? It varies beta times the market. So beta squared sigma m squared is a variance of security return because of the variance of market. Yes or no? Okay. Now, see my sentence. Why the JK limited share return varies? Why it is 25.62, 20.07, 17.05? Why it varies? It varies because the market varies. So we say beta times the standardization of market, the whole square gives you what? Market variance, which causes what? Security to vary. So in that case, this should be equal to this or not? Sir, you are wrong. The security, if you say vary because of market varies, now the variance, the beta times the market variance is not giving what? Security variance. The security varies differently. What a difference? I say, I don't know. It is what? Unsystematic. Are you follow what I am saying? What I know due to market, I call as what? Systematic. The reason if I cannot find out, I call as what? Unsystematic. Everybody follow what I am saying? So again I say, why the security return varies? Because it varies due to market. How much it varies due to market? Beta times it varies due to market. Yes or no? So security return varies. Beta times what? The market variance. In that case, beta square sigma m square is a reason for the security return change due to what? The market change. But this and this is not same. If you say, sir, your variance is different and beta times the market variance is what? Different. Why the difference is arising? I said, I don't know. It may be due to what? Some other company specific factor which we cannot find out. The difference is called as what? Unsystematic, which cannot be explained. Yes or no? That means a variance of security return can be explained and cannot be what? Explained. What can be explained due to market is called as what? Systematic. What cannot be explained is called as what? Unsystematic. Is a risk component. Everybody follow what I am saying? So Sharp says how to classify risk into what? Systematic portion and then what? Unsystematic portion. Point number 2. Everybody following on now. What we are going to do now is, we are going to calculate standard deviation and variance of what? Security. We are going to calculate standard deviation variance of what? Market. As well as what? Standard deviation variation of the error term. And then see whether the equation is tallying or not. It will tally. Everybody follow what I am saying? That is going to be the next stage of discussion. Yes or no? Write down. Give the heading. Okay, heading given. What is the heading given? Analyzing. Analyzing risk using Sharp single index model. Understand or not? Write down. Step 1. All this we know how to calculate now. Step 1. Calculation of I'll put here calculation of variance of security return. We'll write the equation later. Let's write one by one the data. Calculation of variance of security return. Very simple. Alpha is what? Constant. Na? Constant. Always 18.93 first year. Second 18.93. Third is what? 18.3. Constant will never have what? Standard deviation. Only variables will be having what? Standard deviation. Beta also will not have what? Because beta is also a constant slope. Yes or no? What varies is called as what? Variables. Variables only will be having what? Standard deviation. Alpha will not have. I'll discuss about all the 4 input factors later. Can I proceed? Now. Can I proceed above? Now. See. Step 1. What is step 1 here? Calculate the variance of security return. Calculation of variance of security return. In bracket le JK Limited's return. Calculation of variance of security return. In bracket right JK Limited's return. Stop talking. Can I proceed? Now. Write down. Here, we know how to calculate variance or not. Here, 1, 2, 3. Please let's do together. Here, 1, 2, 3. All are known calculations. Here, 1, 2, 3. Y minus Y bar. Y minus Y bar. Can you look at the facts and tell me the numbers here? Y minus Y bar. Facts la Y bar you calculate and not tell me what is Y bar here? 20.91. You all remember or not? Y bar is what? 20.91. Now please tell me what is Y minus Y bar? 25.62 minus 20.91. What number? 4.71. Y minus Y bar 4.71. For year 2, please tell me 20.07 minus what? 20.07 minus 20.9. How going to be? Minus 0.84. Minus 0.84. Please tell me yes or no. Third is what? 17.05 minus 20.91. I hope you are understanding the number calculation or not. Tell me what is the third item here? Minus 3.86. Minus 3.86. Obviously the total should be what? 0. Any difference is due to rounding off. Leave it. Can I proceed or not? No. Please. I want to have a clarity before I proceed. Tell me, what is Y? Return of JK Limited share. What is Y? Return of JK Limited share. What is Y bar here? Average return. I want to know whether you are knowing it or not. What is Y bar? What is average return? Tell me the number, everybody. What is Y bar here? 20.91. Already calculated some of the previous calculation. I don't know what is Y bar? 20.91. Now, tell me how I got 4.71. Everybody repeat. How I got 4.71? Y is 25.62 minus what? 20.91 gives you 4.71. Yes or no? Second case what? 20.07 minus 20.91 gives you what? Minus 0.84 and so on. Yes or no? Now, if you all are away, tell me what is the next column? Y minus Y bar the whole square. Y minus Y bar the whole square. Because what is standard deviation of Y? Sigma Y is equal to what? Sigma Y minus Y bar the whole square divided by N. Yes or no? Same way here. Y minus Y bar the whole square. Please. Y minus Y bar the whole square. 4.71 square. Tell me what is the formula? 4.71 square. What is the formula? It is 22.18. 4.71 square is 22.18. Next, 0.84 squared gives you how much? 0.71. 0.71. 3.86 squared gives you how much? 14.90. Gives you 14.90. Can total it and tell me what the total is going to be? 37.79. 37.79. Tell me what is this 37.79? Sigma y minus y bar the whole square. Sigma y minus y bar the whole square. Can I proceed or not? Next. Continue. Variance of security return. What here? Continue. Same step only continue. Step 1 calculating what? Variance of security return not? Write down variance of security return. I hope you have followed the copy the first point or not? Now, write variance of security return. Bracket la sigma y square. In a sigma y is what? Standard deviation. It is sigma y square. Sigma y square. Variance of security return sigma y square. Sigma y square. Standard deviation of y whole square. What is standard deviation of y whole square? Tell me it is what? Sigma y minus y bar the whole square divided by n. Sigma y minus y bar the whole square divided by n. Sigma y minus y bar the whole square divided by n. Y minus y bar the whole square divided by n is equal to, tell me what is the number here? 37.79 divided by 3. 37.7 gives you going to be 12.60 is equal to 12.60. 12.60. What is 12.60? Variance of security return. When I take square root, I'll be getting what? Sigma y. Standard deviation of security return. Everybody respond yes or no. The variance of security return is going to be how much here? 12.60. Now tell me, in this, I have found out the security return variance over or not? Now, next I have to find out variance of what? Market return. Can I proceed or not? Write down step 2. Write down step 2. Variance of market return. Step 2. Variance of market return. Step 2. Variance of market return. Can I proceed or not? No. We will do this together. Variance of market return. Have the following columns. Can tell me the column here. Next is what? X minus x bar. And that is what? X minus x bar the whole square. X represents the market x-axis. Yes or no? Here x minus x bar the whole square. Shall we proceed or not? Now. Here what? 1, 2 and then 3. Here 1, 2 and then 3. You should know x bar we calculated in the summary. Can tell me what is x bar here? 13 point? Correct about 13 point? Am I right or not? X bar we calculated somewhere earlier 13.24. Can I proceed or not? Now, please tell me. X minus x bar. X minus what? X bar. What is x here? 12.62 minus 13.24. I want number. What is the number? Minus point. X minus x bar minus 0.62. Tell me, next number is what minus what? 21.79 minus 13.24. What the number? 8.55. It is 8.55. Doing along with me or not? Now, third is x minus x bar is 5.32 minus what? 13.24. What is the number here? Minus 7.92. Obviously, the total should be what? 0. Any decimal is due to rounding off error. Can I say x minus x bar the whole square? What is this number here? 0.62 the square gives you. Tell me the number here. 0.3844. 0.3844. Next, 8.5 is going to be 73.10. 73.10. 62.73. 62.73. Everybody yes or no? If I total it, what is the number I am going to get? 136 point. I round down to 2 decimals. 136.21. 136.21. Can tell me what is 136.21? Sigma x minus x bar the whole square. Can I proceed? Now, I want to find next, right? Variance of market. Variance of market. Nothing but what? Sigma x square. Variance of market sigma x square. You can also call it as what? Or sigma m square. Even a person market as m na sigma m square. Sigma x squared or sigma m square. Can I start or not? No. Sigma x squared is equal to formula. What is the formula? Sigma x minus x bar the whole square divided by n. What is the number here? 136.21 divided by 3. 130. What is the man? 40? 45.40. The standard deviation of the market is 45.40. Everybody, are you following what I am saying? No. So tell me, are you able to understand the sequence of computation? No. See, I have three numbers for the past 3 years. One is a security return which varies. I found out its variance. Yes or no? What is the variance of security return we found out here? It is, what is the number here? 12 point some number. Okay. Now there is a market rate which also what? Varies, which found as how much? 45.40. There is also an error term which is going to vary. Yes or no? Now I have to find out the variance of the error term or not. The step 3 is what? Variance of error term. Can I proceed further or not? Write down step 3. Variance of error term. Step 3. Variance of error term. Step 3. Variance of error term. Variance of error term. What is it called as what? Sigma EI square. Sigma EI square. Can I start or not? Now, same column here. Instead of x, y, I have what? EI. I read what? EI. I just have EI column separately for understand. Third column is what? EI minus EI bar. X minus x bar, you have what? What here? Let us do it here now. Here, and then what? EI is what? Error. And that is what? EI minus EI bar. You are right, but let us do it. Can you proceed or not? Now, please. Tell me 3 years he found out error time in one of the previous steps or not? Year 1, year 2, year 3. Tell me what are 3 years error time here? 4.8. 4.8 minus 2.13 minus 2.67. What is the total here? 0. If the total is 0, EI bar also should be what? 0. Correct? EI bar is 0 here, yes or no? EI bar is 0. So EI minus 0 will be giving what? EI only. So the error term and error term deviation also going to be what? 0. So what is the number here? 4.8 minus 2.13 minus 2.67. 4.8. This is EI minus EI bar. Is EI minus what? EI bar. 4.8 minus 0. If you want EI bar is equal to what? 0. 4.8 minus 0 minus 2.13 minus 0 minus 2.67 minus what? 0. I want what? EI minus EI bar the whole square. How we have x minus x bar the whole square na? EI minus EI bar the whole square. Can tell me the number 4.8 square. What is 4.8 square? 1%? 23.04. 2.13 square? 4.54. Second term is 4.54. Third is how much? 7.13. Tell me the total. What is the total? 34.71. Respond yes or no? No. Right now, next. I'll do it here. Variance of error term. That is sigma EI square. Variance of error term sigma EI square. Right? Sigma EI square is equal to, what is the formula? Sigma EI minus EI bar the whole square divided by n. Sigma, wait, yeah. Sigma EI squared is equal to sigma EI minus EI bar the whole square divided by n. Tell me what divided by what? 34.71 divided by 3. How much number? 11.57 is equal to 11.57 is equal to 11.57. Please respond yes or no. Now I want you to tell me, I have found out three variants. So how many variants are there? Three variants. Variants of what? Security return, variants of market return, variants of error term. I found out three variants. Ennappa, right or not? No. She asked a question. I'll now explain that question and then proceed to the next stage. Tell me the return, characteristic market line, return formula. What is the return formula? Ri is equal to alpha plus beta Rm plus EI. Yes or no? Now, in that case, this Ri is a variable. It varies year after year or not? This alpha is what? Constant. It is going to be same in what? All the years. This beta is what? Constant. It remains same in what? All the years. Beta is 0.15. It remains what? Same in all the years. This Rm is what? Variable. This EA is what? Variable. For any variable, it varies. The name variable is what? It varies. For all the three variables, I should be having one a standard deviation or a variance. I found a variance of security. I found a variance of market. I found a variance of what? Error term. Up to this, everybody, yes or no? Can I proceed further? Now, step 1 is over security variance. Step 2 is what? Market, and step 3 is what? Error term variance. Write down step 4. Step 4, analysis of security risk. Step 4, analysis of security risk. Step 4, analysis of security risk. Analysis of security risk. Write the formula. V is equal to, tell me the formula. Beta squared sigma m squared plus sigma ei squared. V is equal to beta squared sigma m square plus sigma ei square. This V, put it on, I can write risk of security. Risk of security, or is also called as what risk? Total risk. Risk of security or total risk. Risk of security or total risk. Tell me, this term is called as what risk? Systematic risk. This is called as systematic risk. And this term is called as what? Unsystematic risk. We call as unsystematic risk. Risk of a security or total risk is equal to systematic risk plus what? Unsystematic risk. Systematic risk and unsystematic risk. Same step you continue. Substitute number or not? Now, we found out V. What is the variance of security found out? Please tell me the number here. It is how much? 12 point? Okay, write down 12.621. 12.60 is equal to variance of security 12.60 is equal to what is beta squared? 0.5 square into what is the variance of market we found out? 45.40. 0.5 squared into 45.40. Don't say 45.40 squared. I just found out as what? 45.40 plus what is sigma EA squared we found out? 11.57 plus 11.57 plus 11.57. So tell me 12.60 is equal to what is this number? 0.15 squared into 45.47. I want a number. What is the number here? How many days here? 1.03. Can I have it as not? 1.03 plus what? 11.53. 1.03 plus 11.53. 11.57. 11. If I total, all should be getting 12.6. This is a risk of the security. Risk comprises of two segments, systematic and unsystematic. The systematic risk is 1.03, unsystematic risk is 11.57. This is nothing but beta square, sigma m square. Nothing but what? The sigma EA square. Everybody, are you having the clarity or not? That's how the total risk sharp divides into what? Systematic as well as what? Unsystematic risk portion. Please respond. Yes or no? Can we move to the next stage of discussion? Write down notes. Write down notes, please. Point number 1. Point number 1. The characteristic market line, in characteristic market line, alpha and beta are constant. In characteristic market line, alpha and beta are constant. Alpha is a constant intercept, beta is what? Constant slope. Okay, alpha and beta are constant, and alpha and beta are constant, and Ri, comma, Rm and Ei. Ri, Rm and Ei. Ri, Rm and Ei are variables. Ri, Rm and Ei are variables. Everybody, point number 1 following not? Next, point number 2. Variables will vary. That's name, okay. That way it is called as variables. Yeah, variables will vary. Variables will vary. Please, variance will vary. That is, it will have variance. Variables will vary. That is, will be having variance. Bracket la standard deviation squared. Variables will vary. That is, it will have variance, standard deviation squared. The relationship between, please, the relationship between security variance, comma, market variance, the relationship between security variance, market variance and error term variance, the relationship between security variance, market variance and error term variance is established through, and error term variance is established through the following equation. Is established through the following equation. So write the equation. What is the equation? V is equal to beta Rm square. Right, that's first time. Beta Rm square plus what? Sigma Ei square. Right here, V is equal to beta Rm the whole square plus sigma Ei square. Right, what I dictate? Beta Rm square plus sigma Ei square. Or, please write, or V is equal to beta square. Okay, sorry. Beta square sigma m square, I understood, plus what? Sigma Ei square. Beta square sigma m square plus sigma Ei squares. Beta square sigma m square plus sigma Ei square. Can I proceed? Now, this we call it as total risk. Don't talk. You may be repeating it, but write it total risk. This is called as what? Systematic risk. It is called as what? Unsystematic risk. Total risk, systematic risk and unsystematic risk. Please, total risk, systematic risk and unsystematic risk. Can I proceed? Next, point 3 or 4? Point 3. Security varies by 12.6. Security varies by 12.6. 12 obviously means what? Percentage only. Okay. Security varies by 12.6. Security varies by 12.6. Full stop. Why it varies? Security varies by 12.6. Full stop. Then write a question. Why it varies? Question mark. Please. Security varies 12.6. Then write why it varies. Question mark. Write the answer. Because the market varies. Because the market varies, the security varies beta times the market. Because the market varies, comma, the security varies beta times the market. The security varies beta times the market. This portion of the security variance, continue writing, this portion of the security variance, this portion of the security variance that can be explained, this portion of security variance that can be explained by market variance this portion of security variance that can be explained by market variance is called, this portion of security variance that can be explained by market variance is called what? Systematic risk. This portion of security variance that can be explained through market variance is called systematic risk. The balance variance of security, I did not explain the full variance, no, the balance variance of security which cannot be explained, the balance variance of security which cannot be explained, the balance variance of security that cannot be explained is called what risk? Unsystematic risk. The balance variance of security which cannot be explained is called as unsystematic risk. Is called as unsystematic risk. Is called as unsystematic risk. I want you to explain. Are you following or not? Now, last point. 6 or 7? Some number. Okay, point number 4. Okay, either one here. Okay. Okay. Right, coefficient of determination. Point number 4. Coefficient of determination. Some books also call as COD. Means what? Coefficient of determination. Coefficient of determination. Very simple formula. Coefficient of determination is equal to systematic risk divided by total risk. Coefficient of determination is equal to systematic risk divided by total risk. Everybody understanding or not? Now, can tell me in this formula, in this problem, coefficient of determination is equal to, what is my systematic risk? Tell me. 1.03. Right or not? It is 1.03 divided by, what is my total risk? 12.6. 1.03 divided by 12.6. Can tell me in 2 decimals? 0.08. Or you can call as 8%. 0.08 or 8%. 0.08 or 8%. Now, let's understand the meaning of this term. Somebody says coefficient of determination is 8% or what? 0.08. It means out of the total risk, I can explain only 8% of the risk due to what? Market. The remaining risk cannot be explained. Are you following what I'm saying? 92% of my risk cannot be determined. Cannot be what? The reason for the 92% of the risk cannot be what? Determined. And I can determine only reason for what? 8% of the risk. That's what we call as what? Coefficient of determination. What proportion of the risk can be determined is called as what? Coefficient of determination. What could not be determined is called as what? The balance. That is called as unsystematic risk proportion. Are you follow what I am saying? Continue writing. This means, right? This means out of the total risk, only 8% can be explained with reason. Out of the total risk, only 8% can be explained with reason. Out of the total risk, only 8% can be explained with reason. And balance 92% remains. And balance 92% remains unexplained. And balance 92% remains unexplained. And balance 92% remain unexplained. That is, the risk that is determinable, that is, the risk that is determinable due to market change, the risk that is determinable due to market change is only 8%. The risk that is determinable due to market change is only 8%. Is only 8%. Everybody, are you following or not? So with this, we analyze the risk in what? The sharp single index model. Everybody following or not? Now, please, I gave you the learning objectives for sharp single index model at the beginning of this particular discussion. Yes or no? Understand that we are not discussing question number 36 one problem. I am discussing what? One full chapter using that particular problem. Can I proceed? Now, please take the learning objectives of that particular question. Have you given the learning objectives or not? Okay, somebody give me the notebook here. Don't talk, please. See, first of all, understanding beta. Now, I want you to respond with me. The consolidating, understanding beta using regression analysis. Did you understand it or not? Please, yes or no? No. Characteristic market line. What is the equation? Ri is equal to alpha plus beta Rm plus Ei. Above that, elaborate notes and discussion has been made. Right or not? Third, understanding correlation, regression and standard error. So when you have a correlation perfect, the regression line will be having zero standard error. If the correlation is what? Imperfect, scattered, then regression will be giving what? Standard errors. So we understood the concept of what? Standard error. Right or not? Next, please. Analyzing security risk into what? Systematic and unsystematic. What is systematic risk? Beta square, sigma m square. What is unsystematic risk? Sigma ei square. Then coefficient of determination. What it is here? It is the systematic risk divided by total risk. Or all the issues till now we discussed. The only point pending is what? Portfolio risk as per the sharp single index model. With that we will be completing the model discussion as such. They will be having some small area called a sharp optimum portfolio. Once I discuss, the sharp will be completed. Please respond. Are you having the clarity or not? No. Please. I put a question and then go to the next stage. When correlation is perfect, and the correlation is what? Perfect. Then what is coefficient of determination? Please. When correlation is perfect, what coefficient of determination? 1. Or how much percent? 100%. Because the entire risk is due to what? Market. Error term is 0. So, when my market movement and my share movement is perfectly tallying, I can say my share moves only because of what? Market. Now due to any other reason, then the unsystematic risk becomes what? 0. The only risk is what? Systematic risk. Everybody following not? Only when the correlation is not perfect, we will be having what? Coefficient determination. Other than what? 100%. It depends on how scattered the point. More scattered the point, more the unsystematic risk, lesser the systematic risk. Closer the point which are scattered, systematic risk improves, unsystematic risk are going to what? Reduce. This is regarding the understanding of the risk of a security. Everybody following or not? No. We go for the portfolio risk determination through the next sum. Please take the next problem, please. Shh. Okay, please. Once again, new study material problem in sharp single index model is a problem in the study material. With this, we'll understand the portfolio risk and concept. Okay, please. Okay. Following details. Stop talking. Request. Once I complete the sum, I'll give you the break. Okay. Sure, the following details are given for X and Y companies. Stop talking. Can I start? Please. The following details are given for X and Y companies on BSE Sensex for a period of 1 year. Calculate the systematic and unsystematic risk for the company stock. If equal amount of money is allocated for the stocks, what would be the portfolio risk? X, Y, Sensex given. Average return, that is called as X bar. What is X bar? 0.15. That means 15%. They call as what? 0.15. Y bar, what is average return of Y here? That is 25%. And Sensex, what average return? RM bar. We call as what? The RM bar, how much here? 6%. Variance of return, 6.3. They did not give you standard deviation. They give you what? Variance straight away. Variance of return 6.3. For Y it is 5.86. For Sensex it is 2.25. Beta of X is 0.71. Beta of Y is 0.685. They have not given beta of Sensex. Tungadya, what it is? 1. Market moves it itself what? One time. Right or not? So, don't say the beta of the market not given. Market moves with itself how many times? One time. Perfectly correlated, yes or no? No. So, the beta of X with market is 0.71. Y with market is what? 0.685. And the beta of the market is obviously going to be what? 1. Coefficient of determination is 0.18. We may require, we may not require this particular number. I'll just use both for doing the solution. Can I proceed or not? No. Please. I want you to first settle down, and then, because when you discuss more and more concept, one should be consolidating, regrouping. That's what I am saying. Now, we're going to start a fresh problem or not. So, first understand the data given before you go for the solution. Before that, don't get confused. Nothing we discuss here. Formula wise, the following only discussed in the previous sum. Okay. Number 1, we had 6 beta formula. What is 6 beta formula? Change in security return divided by change in market return. Sigma S by sigma M into correlation of S and M. Covariance of S and M divided by sigma M the whole square. Beta is equal to sigma xy minus n x bar y bar divided by sigma x squared minus n x bar the whole square. Beta is equal to n sigma xy minus sigma x sigma y divided by n sigma x square minus sigma x the whole square. Beta using 2 regression equation. Tell me the equation. Sigma y is equal to n alpha plus beta sigma x. Sigma xy is equal to alpha sigma x plus beta sigma y. Solve for it to get the alpha and beta. From that regression we had a CML. What is CML? Ri is equal to alpha plus beta Rm plus EI. What is EI? The point on the line minus actual point difference. We have the variance formula. V is equal to what? Beta square sigma m square plus sigma EI square. That is all has been discussed. For this only elaborate conceptual discussion we made along with the notes. Everybody is all know. For all this we know the reason. We have completed till now for single security, the sharp single index model. Are you following or not? No. This problem is going to discuss about what? A portfolio consisting of 2 shares, namely what? X and Y. Can we start our discussion or not? No. Okay, please. Okay, see. First, they did not speak about portfolio. They asked to analyze the individual security. Name the 2 shares, X and then Y. What is return of X? 15%. What return of Y? 28%. Is this 15% return of X sure or unsure? He is having how much variance? Equal as what? 6.3. Tell me in our equation, what is 6.3? V. The risk of the security is what? V. This V of the security X. Yes or no? Now, is 25% return of security Y certain, uncertain, uncertain? How much it varies? 5.8. Is nothing but what? V of security Y. Next. This is market return. How much percent? 6%. Is a market return RM certain, uncertain, uncertain? How much it varies? 2.25. It is called as what? Sigma M squared. It is called as what? Sigma M squared. Innappa, right or not? So, I have the security variance as well as what? Market variance. The beta also has been what? Given. Now, they ask you to analyze the systematic and what? Unsystematic risk of the security. You forget this coefficient of determination. I'll come back to that later. Innappa, right or not? Now, very simple. Question gave me total risk of security. We know the risk of security, we know the beta, we know the risk of market. The balancing is what? Unsystematic risk. Innappa, right or not? Let's calculate that for what? Security X and then what? Security Y, and then later go for the portfolio. Can I proceed or not? Now, first part of the question is all about what? What I asked, already learned, the security return. Can I proceed? Right on. First, step 1. Step 1, analyzing the variance of security X return. Analyzing the variance of security X return. Analyzing variance of the security X return. Please. Analyzing the variance of the security X return. Can we start or not? Write the formula and then substitute. What the formula? V is equal to, please all of you participate, V is equal to beta square sigma m square. V is equal to beta square sigma m square plus what? Sigma ei square. V is equal to beta square sigma m square plus sigma ei square. Please put it omega and write. V is what risk? Total risk of the security. V is total risk of the security. What is second term? Beta square sigma m square is called as what risk? Systematic risk. And sigma ei squared is called as what? Unsystematic risk. Sigma ei squared is unsystematic risk. Shall I proceed or not? Now, substitute the number. I know V or not? Yes. What is V? 6.3 is equal to, V is 6.3 given in the question, total is called security excess or no? 6.3 is equal to, what is beta squared? 0.71 square. 6.3 is equal to 0.71 square into what is the variance of market? 2.25. Don't say 2.25 square because the variance itself is what? Given. 0.71 square into 2.25 plus what? Sigma ei square. Sigma ei square. That is the variance of error term. Sigma ei square. Can I proceed or not? No. Please tell me. Okay, write down 6.3. Put that down and write systematic risk, total risk. Don't worry, systematic total risk. 6.3 is total risk. You are here to correct me. And then 0.71 square into 2.25 is what? Systematic risk. And the balance is unsystematic risk. Total risk, systematic risk, unsystematic risk. Systematic risk is equal, unsystematic risk is equal to correct only, sorry. Nani out of form. Can I proceed? Now, systematic risk is equal to, please, systematic risk is equal to 0.71 squared into 2.25. Systematic risk is equal to 0.71 squared into 2.25. What is systematic risk? 1.134. Systematic risk is equal to 1.134. Unsystematic risk is equal to, 6.3 minus 1.134. 6.3 minus 1.134. That is sigma ei square, which is equal to, sigma is equal to how much? 5.166. 5.166. 5.166. Everybody, are you following or not? Now, this is one way of finding the solution. Are you following what I am saying? So, what the unsystematic is? 5.166. Can you tell me what the formula for coefficient of determination here? Systematic is divided by what? Total risk. Let us check it. COD is equal to coefficient of determination is equal to formula systematic risk divided by total risk. Systematic risk divided by total risk. What is the systematic risk? 1.134. 1.134. What is the total risk? 6.3. 1.134 divided by 6.3. What is COD? 0.18. COD is 0.18. Bracket la confirmed in the question. So COD is 0.18 confirmed in the question. It is given in the question. 0.18 confirmed in the question. Can I proceed or not? No. This is one way of doing it here. Can I proceed? Alternatively. Please write alternatively. Please. Alternatively. Okay. COD, that is COD is equal to formula what by what? Systematic risk divided by total risk. COD is equal to systematic risk divided by total risk. Systematic risk divided by total risk. Then what is systematic risk? Systematic risk is equal to, write down, systematic is equal to what? Total risk into COD. Systematic risk is equal to total risk into coefficient of determination. Please, Systematic risk is equal to total risk into coefficient of determination. Suppose question does not give a beta and all, with this we can solve. Okay, total risk into COD. What is total risk? 6.3. What is coefficient of determination? 0.13. Systematic risk is equal to 6.3 into 0.18. 6.3 into 0.18. Systematic risk is equal to 6.3 into 0.18. Is equal to how much here? 1.134. Please, is equal to 1.134. Unsystematic risk is equal to what? Total risk minus systematic risk. Unsystematic risk is equal to total risk minus systematic risk. Unsystematic risk is equal to total risk minus systematic risk. 6.3 minus 1.134. 6.3 minus 1.134. What is unsystematic risk? 5.166. Unsystematic risk 5.166. Or different angles if you write, you will be having some grip in the exam, no? Or, please write, or unsystematic risk is equal to, please, or unsystematic risk is equal to total risk into 1 minus COD. Unsystematic risk is equal to total risk into 1 minus coefficient of determination. Unsystematic risk is equal to total risk into 1 minus coefficient of determination. Total risk into 1 minus coefficient of determination. Understand or not? Which is equal to 6.3 into 6.3 into what? 0.82. Am I right or not? 6.3 into 0.82. 6.3 into 0.82 is equal to how much? 5.166. Is equal to 5.166. Is equal to 5.166. Please stop talking. Can I proceed? Next. Step 1 over. What is step 1 I have given here? Please. Stop talking. Now, first settle down. Can I proceed? Now, what is the first step heading here? Analyzing the variance of security. Yes. Write down. Step 2. Analyzing variance of security Y. Let us do it together. Please. Analyzing variance of security Y. Analyzing variance of security Y. Formula V is equal to beta square sigma m square. V is equal to beta square sigma m square plus 1 sigma ei square. V is equal to beta square sigma m square plus sigma ei square. Security Y, tell me what is the total risk? 5.86 is equal to, let's do it together. 5.86 is equal to, what is beta square? 0.685 square into 2.25. 5.86 is equal to 0.685 square into 2.25 plus sigma ei square. 0.685 squared into 2.25 plus sigma ei squared. Right. Systematic risk is equal to 0.685 squared into 2.25. Systematic risk is equal to 0.685 squared into 2.25 is equal to 1.056. Is equal to 1.056. Next, unsystematic risk is equal to total risk minus systematic risk. Unsystematic risk is equal to total risk minus systematic risk. Total risk minus systematic risk, which is equal to 5.86 minus 1.056. Which is equal to 5.86 minus 1.056 is equal to sigma ei square. Is equal to sigma ei square is equal to 4.804. Is equal to 4.804. Are you following or not? 4.804. Write down. COD is equal to, please, coefficient of determination is equal to, COD is equal to formula systematic risk divided by total risk. COD is equal to systematic risk divided by total risk. Systematic risk divided by total risk, which is equal to, tell me what by what? 1.056 divided by 5.86. 1.056 divided by 5.86 is equal to how many times here? 0.18 times. Is equal to 0.18. Is equal to 0.18. Now, Don't think that always COD in a 0.18 here. In this question for x and y, incidentally the coefficient became what? Same. For x you may have a different coefficient of determination. For y may have what? Different. It all depends on correlation of what? Security and market. Everybody yes or no? So in the sum it was coincidental that both is having what? Same. Right? Alternatively. Please. Alternatively, systematic risk is equal to, please write quickly, systematic risk is equal to, I want to tell and then write, systematic risk is equal to what? Total risk into coefficient of determination. Systematic risk is equal to total risk into coefficient of determination. Total risk into coefficient of determination, which is equal to 5.86 into 0.18. 5.86 into 0.18. What is that systematic risk? 1.056. 1.056. Unsystematic risk is equal to, where is the second formula? Unsystematic risk is equal to total risk into 1 minus COD. Unsystematic risk is equal to total risk into 1 minus COD, which is equal to 5.86 into 0.82. Is equal to 5.86 into 0.82, which is equal to 4.804, which is equal to 4.804. Okay. This is nothing new. What I will discuss in the previous sum itself. Can I proceed or not? Now, one last point. With this, we will complete this particular discussion. Okay. Now, that is called as portfolio risk. I am going to discuss about what? Portfolio risk. Please.
Thank you friends. OMSAI Bhojanapalli.